Guys, buckle up because right now the crypto markets are shaking with the kind of high-stakes drama that could be the exact signal XRP holders have been waiting for. A major crypto project tied to the president's family is under fresh scrutiny, with reports of investigations, questions about transparency, and even updates pulling back certain listings that used to be right out front. At the same time, the whispers exploding across the space are turning into a roar. All the available XRP out there is quietly vanishing from exchanges, with billions in outflows and whales snapping it up into cold storage faster than most people realize. It feels chaotic on the surface, but when you start connecting the dots between this president-related buzz, geopolitical moves, regulatory breakthroughs, and the raw mechanics of supply and demand, the picture for XRP holders becomes crystal clear and honestly, pretty exciting. Before we dive any deeper, I have to remind everyone that this is not financial advice. I'm not a financial advisor, and nothing I share here should be taken as investment recommendations. Always do your own research and consult with qualified professionals before making any decisions. I've been watching this space like a hawk, piecing together these threads from real developments, and I have to tell you the contrast is striking. On one side, you have projects tied to high-profile names, drawing heat from senators probing ethics, potential self-dealing, and partnerships that raised red flags with sanctioned entities. Stuff that's got everyone buzzing about whether it's sustainable or just hype that could unravel fast. Reports are coming out left and right about World Liberty Financial facing fresh questions over links to networks under US and UK scrutiny, with details emerging about deals that weren't fully transparent at first. It's the kind of drama that makes you pause and ask, in a market built on trust, how do these things play out when the spotlight hits? And yet, right alongside that, XRP is operating on a completely different level. Fixed supply, real utility and payments, and institutional players actively absorbing what's out there. That's not rumor mill stuff. That's the news cycle showing us the mechanics at work. Let's jump right into it because this isn't just scattered events. It's a web of connections that positions XRP in a spot most assets would kill for. Start with the president's family crypto angle that's dominating feeds today. As of April 11th, we're seeing ongoing probes into how these ventures operate, including questions around stablecoins like USD1 and broader ethics claims that have even pulled in congressional attention. Some voices are calling parts of it manipulative or overly promotional, especially with price action on related tokens dropping hard after initial pumps, down 90+% in some cases from peaks. The website itself has reportedly scrubbed certain member listings and visuals that were there before, fueling speculation about damage control. Now, I'm not here to pile on. I'm connecting it to the bigger picture. This kind of opacity and scrutiny highlights exactly why XRP stands out. Its ledger has always been about transparency, with every transaction verifiable, escrow releases scheduled in public, and a token model designed for actual use rather than endless hype cycles. Detractors love to paint the whole space with the same brush, but when you zoom out, XRP's fundamentals don't bend under the same pressure. Here's where it gets really interesting for XRP holders. That rumor circulating hard right now about all the available XRP being about to disappear. Guys, think about it. Recent data shows nearly 6 billion XRP, worth over $3 billion, vanishing from visible exchange supply in under a week. Scarcity indicators are hitting levels not seen since 2024, liquidity is compressing, and whales are moving massive amounts into private custody. It's not random dumping or panic. It's strategic accumulation. Institutions and smart money aren't just holding. They're repositioning for what's coming, pulling supply off the open market because they see the real-world utility kicking in. We've got Japanese banks running live pilots showing XRP settlements 60% cheaper and under 4 seconds compared to SWIFT. That's not theory. That's deployed tech, saving real costs in cross-border payments. And with outflows like this, the tradable float is tightening fast. If you're holding, this isn't a red flag. It's the mechanism that could force a repricing as demand from banks and payment rails outpaces what's left floating around for retail. XRP's total supply is capped at 100 billion, with mechanisms like transaction burns steadily reducing it over time and escrow unlocking in controlled batches to prevent floods. When you layer in institutional buying, think custody giants and payment hubs absorbing chunks for liquidity, the available supply for everyday traders starts to feel scarce. This isn't some overnight fairy tale, it's the slow grind of adoption playing out. We've seen whales and funds quietly building positions while the noise distracts everyone else. And the beauty is, unlike those other projects under the microscope, XRP's value isn't propped up by marketing. It's tied to actual throughput on the ledger, where millions of transactions are humming daily for real financial rails. Now, let's connect this to the geopolitical side, because the president just flipped the script on the markets again, and it ties straight back to why XRP could catch the next wave. As of today, April 11th, Vice President J.D. Vance is in Pakistan, leading direct peace talks with Iranian officials, the highest level face-to-face in years, alongside figures like Jared Kushner and Special Envoy Steve Witkoff. They're hashing out ceasefires, the Strait of Hormuz, and regional stability, with the president announcing the U.S. has started clearing mines there to reopen tanker traffic. This isn't background noise. It's a potential catalyst for lower oil prices, reduced inflation pressures, and a massive risk-on shift across assets. When oil volatility eases and markets stabilize, crypto, especially utility plays like XRP, tends to roar back. We've seen this pattern before. Short-term chaos from headlines gives way to the big clap when fundamentals align. XRP's role in cross-border settlements shines even brighter in a calmer macro environment where banks need efficient, low-cost bridges more than ever. And right in the middle of all this, the Clarity Act is gaining serious traction. Senators are pushing hard with markup sessions potentially locked in for late April, once the Senate returns around the 13th. This isn't vague hope. It's the bill that would cement XRP's status as a commodity in federal law, unlocking floodgates. We're talking banks finally able to use it as a bridge asset without regulatory gray areas, spot ETFs already pulling in inflows, and projects like RLUSD stablecoins scaling up. Influencers and analysts on X are lighting up about it. One big account laid out scenarios where post-clarity valuations could reprice aggressively, with XRP in ranges that make holders' eyes widen. Another highlighted how Scott Bessent is straight up saying the market structure bill, including clarity, must pass this spring. Guys, this is the regulatory clarity everyone's been waiting for, contrasting sharply with the scrutiny on less transparent ventures. While some projects face ethics probes and supply dump questions, XRP's fixed model and utility focus get the green light for trillions in potential flows. I've followed these cycles long enough to see the pattern repeat. Turbulence feels like the end of the world in the moment, but it's usually just background static before the real catalysts hit. Remember the 2017 run? XRP went parabolic on adoption hype, then corrected hard in the bear winter. Zoom out now, and we're in a similar setup, but with way stronger fundamentals. Institutional players like Aviva Investors, DBS Bank, and Goldman Sachs are circling, DTCC and Deutsche Bank integrating Ripple Tech, and tokenized real-world assets projected to hit massive scales with XRP as the connector. The disappearing supply? It's not scaring smart money away. It's drawing them in because they know once clarity locks in and geopolitics calm, the demand for efficient payments will explode. Contrast that with Bitcoin maxis, who dismiss anything not pure store value. They miss the point that XRP solves actual problems banks pay billions to fix today, or the hypocrisy in the industry where some projects tout decentralization but operate with insider advantages. XRP's ledger burns fees transparently, escrow is public, and progress like the XRP Tokyo conference pilots prove the utility in action. This all ties back to the theme here. In uncertain times, when one high-profile crypto venture draws fraud-like allegations and supply questions, XRP's path is the opposite. Scarcity building from real demand, regulatory tailwinds, and macro flips working in its favor. This president-related news might create short-term FUD across the board, but for XRP, it's highlighting the resilience. Holders aren't just bag-holding speculation. They're positioned at the intersection of payments innovation and global finance. Psychological angle? Panic sellers miss the forest for the trees, while those connecting these dots feel the empowerment of being early. Smart money doesn't chase memes during probes. They accumulate on dips when supply tightens and clarity nears. We've got whale movements, exchange outflows, and community buzz on X, all pointing the same way, preparation for the boom. Let me paint the narrative arc a bit more vividly. Imagine the market as a sound wave. Right now, the president-related crypto drama and Hormuz talks create these sharp spikes of volatility, noise that drowns out the steady hum underneath. But that hum, it's the XRPL processing transactions faster and cheaper, banks piloting real savings, and the Clarity Act barreling toward law. When the big catalyst claps, the combination of peace progress lowering energy costs, regulatory certainty freeing institutions, and visible supply compressing, the wave builds into something massive. Historical parallels? Look at past cycles where regulatory wins or macro shifts ignited altcoin seasons. XRP is not repeating the dinar-style fairy tale some push. It's grounded in ledger burns reducing supply over time, escrow mechanics preventing dumps, and utility driving adoption. This isn't about overnight riches. It's about the inevitable repricing when trillions eye efficient rails. Critiquing the misinformation out there keeps it real too. Some maxis or FUD spreaders love claiming XRP is just for banks, and retail will get squeezed out completely. That disappear narrative twisted into doom, but the data shows small wallets still growing alongside institutional moves, and the burns plus demand create deflationary pressure that benefits everyone holding through the utility phase. It's not about excluding the public, it's about the public holding an asset that's finally getting the institutional respect it earned. In uncertain times like these, with market dips testing nerves, this analysis reassures the connections aren't random. They're converging for a forward-looking shift, where XRP isn't just surviving, it's thriving as the bridge in a tokenized world. Guys, here's the optimistic truth that gets me hyped every time I connect these threads. This positions XRP holders ahead of the curve in a way that feels almost inevitable. The president's family-linked projects challenges underscore the importance of transparency and utility, qualities XRP has baked in from day one. The vanishing supply signals institutions voting with their wallets for real adoption, not hype. Geopolitical de-escalation via Hormuz and Pakistan talks could spark the risk-on recovery crypto needs. And Clarity Act momentum, it's the unlock that turns pilots into global standards, potentially repricing XRP as banks and funds deploy at its scale. I've seen enough cycles to know the emotional roller coaster, panic during dips, euphoria on breakthroughs, but staying grounded in these facts turns despair into excitement. You're not just holding a token, you're part of the infrastructure reshaping finance. Now let's go even deeper on why the supply disappearance is such a powerful force for XRP right now, because understanding the mechanics can give you that extra layer of confidence when the noise gets loud. The XRP ledger isn't some static pot of coins waiting for a miracle event. It's an active living system where every single transaction on the network permanently burns a fraction of XRP as a fee. That might sound small on a per-transaction basis, but when you scale it to millions of payments happening daily across global rails, it compounds into meaningful deflation over months and years. Add in the escrow releases that are programmed months in advance and released in controlled, predictable waves, and you have a supply schedule that's the opposite of the unpredictable dumps you see in other projects. When institutions step in and pull hundreds of millions off exchanges into custody solutions or private wallets, that available float for everyday trading shrinks even faster. It's like watching a river that was once wide and shallow suddenly narrow into a powerful channel. Same amount of water overall, but the pressure and velocity pick up dramatically because the path is tightening. This isn't speculation. It's observable on-chain data showing consistent accumulation patterns by large holders who aren't flipping for quick profits, but positioning for long-term utility growth. Think about the global perspective here too, because XRP's story isn't just playing out in the US. It's international in a way that sets it apart. Banks in Japan, Singapore, and parts of Europe have been quietly running pilots that demonstrate real cost savings and speed advantages in cross-border transfers. These aren't testnet experiments anymore. They're live integrations where XRP acts as the bridge asset that settles in seconds instead of days, cutting out intermediary fees that traditional systems charge like clockwork. When you factor in the president-related news creating short-term market jitters across the board, it actually creates buying opportunities for these institutions that operate on longer time horizons. They don't care about daily headlines. They see the underlying infrastructure needs of a world that's moving more and more toward instant, borderless finance. And as peace talks progress and oil volatility potentially eases, the entire risk-on environment improves, which historically lifts utility tokens like XRP higher because they solve actual problems rather than just promising moonshots. Here's another layer that gets me excited every time I revisit it: the psychological side of holding through this moment. So many XRP enthusiasts have ridden the waves of hype and doubt for years, and it's easy to feel that familiar knot in your stomach when president-linked drama hits the feeds or when supply numbers start looking tighter. But connecting these dots flips that anxiety into something empowering. You're not just hoping for a random pump. You're watching a convergence where regulatory clarity removes the last big barriers, supply dynamics create natural upward pressure, and real-world adoption metrics keep climbing. Bitcoin maxis can keep focusing solely on store of value narratives, and that's fine for them, but they often overlook how XRP addresses the trillion-dollar inefficiencies in global payments that banks complain about every quarter in their earnings calls. The industry hypocrisy is real. Projects that scream decentralization while keeping control in the hands of a few insiders. Yet XRP's public ledger shows every move, every burn, every escrow unlock for anyone to verify. That transparency builds trust over time, especially when contrasted with the questions swirling around less structured ventures right now. Let's expand on the Clarity Act, because its momentum is one of the strongest tailwinds we have, and it directly counters the kind of uncertainty created by any high-profile project under the microscope. This bill isn't some vague wish list. It's the framework that would classify XRP clearly as a commodity at the federal level, giving banks and financial institutions the green light to integrate it without fear of regulatory gray zones. Imagine what that means for spot ETFs that are already seeing inflows. They could scale even bigger once legal clarity locks in. RLUSD, Ripple's own stablecoin, gains even more legitimacy as a paired asset on the ledger, creating seamless liquidity pools for institutions. Analysts on X are already modeling scenarios where this kind of certainty could drive aggressive repricing, not because of memes or celebrity endorsements, but because the fundamentals finally align with the scale of global finance. When the Senate returns and markup sessions kick off around the 13th, we're potentially weeks away from a catalyst that changes the game permanently. This president-related news might dominate the short-term conversation, but clarity cuts through the noise by focusing on structure and utility rather than personality-driven hype. I also want to spend some time on the historical parallels, because they provide such a reassuring lens when the present feels volatile. Back in the 2013 to 2017 era, XRP experienced massive growth, fueled by early adoption signals, followed by sharp corrections during broader market winters. The key difference today is the depth of institutional involvement and the maturity of the technology. We've moved far beyond speculation into actual deployment, with tokenized real-world assets on the horizon that could reach enormous scales and use XRP as the efficient connector between traditional finance and blockchain rails. DTCC and Deutsche Bank integrations aren't future promises. They're active steps that show big players are already building on the foundation. The disappearing supply only amplifies this. As more XRP moves into long-term holds, the remaining liquid supply faces increasing demand pressure from these enterprise use cases. It's a setup that rewards patience and a clear-eyed view rather than emotional reactions to every headline. Another angle worth exploring is how this all plays into broader industry norms and the smart money behaviors we're observing. In a space full of projects that rely on constant promotion to maintain interest, XRP's strength comes from solving real problems that institutions pay billions to address every year. The burns create a built-in scarcity engine, the escrow prevents sudden supply shocks, and the transaction speed and cost advantages make it practical for high-volume payments. When you see whales accumulating during periods of president-related FUD, it's not random. It's calculated positioning ahead of the clarity and macro shifts we expect. Small wallets continuing to grow alongside that institutional activity shows the ecosystem remains inclusive. It's not an either-or situation where retail gets pushed out. Instead, the deflationary pressure benefits everyone holding through the utility phase, turning what some call the disappear narrative into a positive long-term force rather than a threat. Critiquing the misinformation keeps us grounded and helps turn potential despair into excitement for the community. Too often, voices twist the supply tightening into some kind of exclusive club narrative, but the on-chain reality paints a different picture. Adoption is broadening, not narrowing. Global perspectives matter here too. XRP's utility in Asia and Europe for remittances and treasury operations continues to expand, creating demand that isn't tied to any single country's politics. As the president-related drama settles and geopolitical progress potentially lowers energy costs, the entire crypto market could see a fresh risk-on wave that lifts utility assets like XRP particularly well. This isn't blind optimism. It's pattern recognition from someone who's tracked these cycles closely. The bigger vision keeps pulling me back in because the crypto space is evolving from wild speculation into mature, utility-driven networks, and XRP sites right at the heart of that transformation. With supply tightening through natural burns and strategic accumulation, regulatory clarity on the horizon, and markets potentially flipping positive on peace talks and policy progress, the future looks brighter than the current noise suggests. It's the kind of setup that rewards patience and insight, empowering the community to navigate uncertainty with confidence instead of fear. The dots are connecting in ways that feel almost inevitable when you step back and see the full picture. Scarcity from demand, transparency that builds trust, and infrastructure that solves problems at scale. This isn't just another cycle, it's the moment where XRP's long-built foundation finally gets the recognition it deserves. Drop your thoughts in the comments. What connections are you seeing between these events and XRP's path? Do you think the scarcity play accelerates post-clarity? Hit that like button if this breakdown fired you up. Subscribe for more real-time analysis on these catalysts, and let's keep the conversation going. The dots are connecting, fam. The big picture for XRP is unfolding right now, and it's one hell of a ride ahead. Stay sharp, stay optimistic, and I'll catch you in the next one.